Whether you're taking your first step toward investing or you're ready to fine-tune your portfolio, one thing is certain: understanding asset classes is essential. In this video, we'll break down the core building blocks of any investment plan and show you how to put them to work in your life. Welcome to Alfa Pride Financial, your trusted source for business and personal finance solutions. If you want more tips like this video, subscribe to our channel and ring the bell for more life-changing content. An asset class is a category of investments that behave similarly in the market and are governed by the same laws and regulations. Think of asset classes as different tools in your financial toolkit. Each has a purpose and performs differently under various conditions. The 5 major asset classes we'll explore today are equities, fixed income, cash and cash equivalents, real assets, and alternative investments. Together, they form the foundation of any diversified investment strategy. Equities, or stocks, represent ownership in a company. When you invest in a company's stock, you're essentially buying a slice of its future earnings. Stocks offer the highest growth potential of all asset classes, making them essential for long-term wealth creation. But with great opportunity comes greater risk. Stocks are subject to market swings and economic cycles. Some pay dividends, offering a stream of income in addition to price growth. Others may be high-growth startups with no dividends, but huge potential. The key: know your goals and risk tolerance. For long-term investors, equities can be the engine of growth. Fixed income includes bonds and other debt instruments. Unlike stocks, bonds don't represent ownership. Instead, you're the lender. You lend money to a government, municipality, or corporation, and in return, they promise to pay you back with interest. Bonds provide stability and are popular with conservative investors and retirees seeking predictable income. They act as a counterbalance to stocks, softening your portfolio's ups and downs. This category includes the most liquid and least risky investments: savings accounts, money market funds, and treasury bills. While returns are modest, the primary benefit is security and accessibility. These are your go-to for emergency funds or temporary parking for cash you're not ready to invest elsewhere. Real assets are physical or tangible items. Think real estate, precious metals, farmland, or infrastructure. These assets are valuable for their ability to hedge against inflation and provide long-term capital appreciation. For example, real estate can generate rental income while increasing in value over time. Commodities like gold or oil often retain value when paper assets decline. Alternative investments include anything outside traditional stocks, bonds, and cash. These can be hedge funds, private equity, venture capital, and increasingly cryptocurrency. While these options carry higher risk and often require longer time horizons, they offer exposure to unique opportunities and diversification. These are typically best for experienced investors or as part of a broader strategy. Derivatives are complex financial contracts whose value comes from an underlying asset, like a stock, bond, or commodity. These tools are often used by professional investors to hedge risk or speculate on price movements. Common derivatives include options, futures, and swaps. They're powerful but risky, best approached with expert guidance. Exchange-traded funds, or ETFs, offer instant diversification. They bundle various investments, like stocks or bonds, into one fund that trades on the stock exchange. ETFs are great for beginners because they're cost-efficient and transparent. Want to invest in tech, healthcare, or international markets? There's likely an ETF for that. Mutual funds also offer diversification, but they're structured differently. Instead of trading like a stock, mutual funds are priced once daily. They're actively managed by professionals and often used in retirement accounts like IRAs or 401ks. They may come with higher fees, so it's essential to weigh cost versus performance. Annuities are contracts with insurance companies that guarantee income, usually during retirement. You can choose from fixed, variable, or indexed annuities depending on your risk appetite. They're complex, but for some retirees, annuities offer peace of mind by creating a paycheck for life. Each asset class plays a unique role. Stocks drive growth. Bonds offer stability. Cash provides liquidity. Real assets hedge inflation. Alternatives diversify further. The magic happens when you combine them in a diversified portfolio tailored to your goals. This balance reduces your risk while still aiming for solid returns. The mix, known as asset allocation, should evolve as your life changes. If you found this video helpful, hit the like button and subscribe for more personal finance tips. And if you have any questions or topics you'd like us to cover, leave a comment below. We'd love to hear from you. Thanks for watching, and see you in the next video.